Indian HNIs have really not made that kind of a money. And how do you give access to Indian investors who have, say, a 15 to 25, 30 crore kind of a portfolio and still access this whole market? So, private equity is a huge marketplace. There are various stages, various kinds of sectors where you can look at. But the biggest bottleneck is that you can do these investments only through alternate investment funds. And as per SEBI, who's our regulator, each alternate investment fund will have a minimum investment of 1 crore. And therefore, if you want to make a holistic private equity portfolio, you need to allocate at least 8 to 10 crores, which means, and which should not be more than 20% of your portfolio, which means that you should have a 50, 60 crore portfolio to get the right allocation into private equity investments. Now, that's not possible. While people might have 10, 15, 20 crore portfolios, they are not, portfolio sizes are not small. How do they benefit from this? And especially when, if you look at the return profile, normally what we say is that very low risk, large cap listed equity should be able to give you 15 to 20% return in Indian markets. If you move to mid cap, small cap, and a little higher risk, you can look at about 18 to 22% kind of a return. And to select good managers in that, you can still make 22 to 25% return. And this is annualized IRR that I'm talking of. But if you look at private equity, because these are a little illiquid, you have to lock in your funds for some time, and they're longish in tenure, 5 to 8 years, you should be able to generate 25 to 30% return. So in the classic life cycle of a portfolio that one builds, you should have allocation to debt, listed equity, high growth listed equity, and private equity. Now, within private equity also, you'll have lot of nuances, like there'll be early stage, growth stage, late stage, high risk, low risk, long tenure, short tenure. So how do you get access to all these and make a composite portfolio? For smaller investors, the best way to do is to go to a fund of fund. Now, what is a fund